think one of the biggest impediments of exit for most entrepreneurs is their identity. They lose their identity. This is who I am. I'm the CEO of this company. No, you're not the CEO of this company. You're an entrepreneur. And entrepreneurship is a trade like any other trade, and you need to sharpen that sword.
I was mentioning before we started, loved reading your book, Start, Scale, Exit, Repeat, because there's just so much practical wisdom that you lay out in there in a way that is incredibly consumable and applicable for, the majority of these startup entrepreneurs. And I would say even leaders at every stage. What led to writing that book for you? And I want to get into all the stages and everything, but that had to have been a tremendous amount of work to create this project, your book.
Yeah, 10 years. 10 years, a lot of airplanes, a lot of flying. And I had about 200 interviews done we had 6 full-time staff members over a period of 2 years before the book launched, to interview some great interviews, by the way. People like Jeffrey Moore, who wrote Crossing the Chasm, and Joe Foster, who founded Reebok. So what we did in this book is really compile a lot of stories and then evolve conclusions. What were some of the lessons learned from my experiences and from the experiences of so many other people who joined us on this book. The genesis of this book, I would say, it goes back to my 20s, in the 1990s, when we launched an internet service provider, and it went public, and we became at the one time we were the largest internet service provider in Canada. The company was bought by a cable company, and it was a stock-for-stock swap, and we were locked up for 18 months. And it was bought by this cable company, and the stock shot up from 180 million to 1.6 billion or 1.5 billion or something around there. And I own 13% of this company, and I'm like 28, 29 years old. Okay. And something happened in March of 2000. Do you remember what happened back then? You might be too young for this. I don't know.
At 65, I definitely remember what happened.
That was the dot-com crash. Exactly. And bad things do happen. And that company that I was locked in on, had no control over, I ended up selling all of my shares at 6 cents a share. It was a public company. It was trading at $19 a share, and I ended up selling at 6 cents a share. I lost all the money, my wealth at that time, 98% of my wealth, and most of the wealth of my employees at the time, many of whom were paper millionaires when we did go do this merger. That became sort of the genesis of Start, Scale, Exit, take some money off the table, repeat. One of the biggest things about the book is we try to understand waves, tech waves, paradigm shifts, and how do you capitalize on those paradigm shifts? And we talk a lot about that in the book. So that I've done very well, but I spent 10 years building that company and 10 weeks screwing up the exit. So you got to get it all correct. And I believe Start, Scale, Exit, Repeat is a formula that can be replicated. I've done over 12 multi-million-dollar companies since then. Our next company, my brother and I started in 2000, was a hosting company, which we ended up selling to a Fortune 5, went public in the US with an S1, and we ended up selling it to a Fortune 500 company. And of course, and this was in 2007 or 2008. And this time it was for all cash. Of course, we learned our lessons, right? But interestingly, it was a month before the Lehman crisis that we closed that transaction. And I have no doubt, had we not closed that transaction and somehow it was delayed a month or two, it would have been off because of the Lehman crisis. So timing is significant. And we get into the book, we really do get into the start element, and then the scale, and then the exit and the repeat. And timing is a big component of raising money in start and scale and exiting as well.
Yeah, incredibly important. When the dot-com crash happened, I had a global aerospace business. It really didn't affect us at all. But when 9/11 happened, because we repaired, overhauled, and manufactured parts to service the aftermarket, it cratered almost all of our competition. It was a crazy time, but we figured out a way to get through that. But we had always focused on how do we make ourselves recession-proof. And there were a few things we did where we actually grew through it, where most pulled back and many went out of business. How do you think about making a company recession proof? Because when I think about the story in the book and listening to some of your interviews around Internet Direct Canada, you kind of lost control of it and things out of your control happen that cause that. When you have control, I bet you would have made better choices, obviously, going through that. But how do you think about, we have these founders, we have folks, running, building companies, making them recession proof or at least significantly, resistant?
I think that's something you probably have to do when you decide to start your company and understand the dynamics of recessions. What I've done right now, more importantly, because let's be quite frank, not every company is going to survive recessions. Like if you're in a real estate business and a recession hits, you're in trouble, right? But that's your expertise. So I'm not always about building recession-proof companies. What I am about is understanding cycles, because cycles do happen. And what we've done now at startup.club, and you can sign up to our monthly newsletter, just go to startup.club and sign up, is we have it's called the time to sell index, the Startup Club time to sell index. So we tracked for 25 years the liquidity of the market for IPOs. And now, because the reality is all liquidity flows from the top, which are IPOs. If you think about it, like these $1 trillion IPOs that are going to occur with SpaceX and OpenAI and Claude, that money is going to come into the ecosystem. Then it's going to come down the ecosystem into private equity, venture capitalists who've invested in these companies, and then they're going to invest in more companies. When that IPO window shrinks or drops, it closes the opportunity. That is not the time to sell. And so we tracked it for the trough to peak for the last 25 years. Ironically, I think it was 2021 had 1,000 listings in the United States. A lot of SPACs were going live there. I don't know if you remember that. Total crazy. Remember crazy? Back to the time, craziness. Remember GameStop? Like things were going through the roof on GameStop. Remember NFTs, $500,000 Bored Apes cartoons. Like you can't sell those things for a fraction of the value today. And then 1 year later, we went from 1,000 listings down to 154 listings in the United States. And so what you've got when you see that kind of contraction occur, it dries up the money supply and it becomes more difficult for companies to sell at premium valuations. And so what we've done now is we track the time to sell index. We track that metric, and it's just an impartial metric. It's not a real estate metric because real estate is more function of the interest rate environment. This is more a function of liquidity in the market for startups. And so anyway, so we do track that, and it's fascinating to see how it's ebbed and flowed. And we've been in a really tough market. Even I think our last reading was about 26.8 out of 100. And we're saying that 50% is a balanced market. Anything over 50 is a seller's market. Anything under 50 is a buyer's market. So the point is the timing to sell is probably more critical in your equation than the actual can you build a recession-proof company. I actually think that once you identify some of the anecdotal, GameStop, SPACs, all when you can start to see froth in the market, that's anecdotal. And then I say exit stage left. That's the time you just quietly exit stage left. Let other people make money. We blew, this is in my DNA, okay? This is the reality. All right. This is my DNA. Like we blew $100 million. I blew $100 million. We took $1 billion company and a $180 million company, merged it into a $1 billion company, and it all went to nothing. So this is definitely in my DNA. And the reality is in 2008, we sold Hostopia to a Fortune 500 company. It was a publicly traded company. And we sold .club, alternative to .com, .net, .org. It was .club. We sold that to GoDaddy months before the tech wreck. When things are frothy, it's time to exit stage left. But it's okay to be in an industry that's not recession proof. Just understand recessions are going to come. And when they do come, you've got to adapt with them if you haven't sold your company. You've got to change your metrics. So we run a company called paw.com, paw.com right now. It's a company that I own. And that company, I mean, it was frothy. It was doing very, very well in 2021. Then the post-pandemic hangover came. It was a little too early to sell, but post-pandemic hangover came, and it's been struggling ever since. We are now just finally coming out of the malaise after the tariffs and the interest rates and all the stuff that was thrown at us. We're finally coming out of it, and but there's a different metric. In that case, in 2021, these companies were selling for these e-commerce companies, micro brands were selling for about 1 times revenue. Today, they're selling for 4 to 8 times EBITDA. Our company might get a 6 or 7 times EBITDA because we're paw.com. We have a great brand. So it's a different metric, and your metrics change.
Yeah. Yeah, I think putting some thought into how will your business model handle, dips in the cycle, for your industry it's a worthwhile exercise to kind of go through. So when you do the math, it doesn't kill you. Getting to the start piece of it, the idea improving scalable traction. So all of my businesses so far, even one that was ridiculously capital intensive, this global aerospace business I sold in 2016, never had to raise a dime of outside money. I've heard you say have your customers pay for your growth. Well, that's what we did. We go sell stuff, do it, and pour everything back in. And the capex budget the first year was 75. Actually, it was funny. The capex budget was $175 the first year. Bought a bunch of shells with it at an auction. They just wanted us to get rid of this stuff. And then it was $36 million the year that I sold it.
Wow.
But never had to raise a dime in a sector where if you got a 7 or 8 multiple of EBITDA, you did really well. We got 21.6. To your point about the right buyer, yes, it was an amazing strategic. Everybody did well. Going through. But when you start out, I guess 2 things I'd love to get your thoughts on. I've heard you talk about this already, but the idea and how to get that going without wasting a ridiculous amount of money, and then also how to think about raising money because wow, there's so many traps, right?
Yeah. All right. So I love this part is the idea. Um, you can pick an idea like my wife and I did about 15 years ago and start we bought a school here in Fort Lauderdale. And when it came to scaling that school or, adding more students because we hit capacity, when we did the analysis, it was minimum $2 to $3 million to add a new floor, buy a new building, move to a new location. It was not a very scalable business. Uh, so one of the first things I suggest that people think about is how scalable is your idea? When we did .club, I mentioned that earlier, it was an alternative to .com. And in that case, we were able to scale it to 1 million domain names. We have almost unlimited inventory, right? And nothing holding us back other than our ability to market and sell these names through distribution channels. That was highly scalable. So when you first think about your idea, that's the opportunity to think about how do I create a scalable idea? But then the second thing you want to think about is the moat. Like, for instance, that school has a very good moat because it's very hard to get a license to do a school in a particular urban environment. So that's strong, but it's not scalable. In the case of .club, we had a very strong moat because even Google and Amazon, they did .group and .team, but they didn't have .club. So if you wanted a .club, you had to go through our registry to get .club. You could get an alternative like .group or .team, but it's not the same. So we had a very strong moat. You can create these moats through patents, through branding, even branding like paw.com. We have unique products that we sell on paw.com that you can't get on Amazon. And by having those unique products, by having those patents, by having the trademarks, by the way, trademarks are also important because we've taken down a lot of, we've taken people out of Costco for patents violations. We've taken many companies out of Amazon for trademark violations. And by having those in place, then it gives you that moat. So when you're thinking of an idea, I'm very big on that concept. Is it scalable? And can you build a moat? And let me tell you this, Lee, it is so much easier to run a larger company than it is to run a smaller company like a school with 17 teachers and 100 students and 50 parents. It is so hard on my wife to run that school. She runs it. I don't get involved in it, but she runs it. But it's a tough gig. But running a domain platform like .club and selling for GoDaddy, you talk about multiples like Hostopia. I can talk about that one. That was the one we sold in 2008. That sold for 17.7 times EBITDA. I can definitely say that .club sold for a lot more than that. So when you get it, if you get into the right type of business that's that has that scalability, has the moat, you're going to command a very big exit at the end.
Yeah. And just as a quick note, that's always been my experience in so many ways. Running a company, once you pass hundreds of employees, is so much easier than up to 100 employees.
Have you gone reverse?
No,
I did that. 2008, I worked at the Fortune 500 company for 3 years until 2011, and then I left that and did .club, and I'm done from like 600 employees to like 6 employees or 8 employees, and it was tough. It was really tough to go from that kind of level of company to a smaller company. And even when I hire people, you mentioned Jack Welch before this podcast, he has a saying called hire people with runway. And I believe in that. So if you want to scale your business, you need to hire the right people who've gone from, let's say you're a $1 million company, who've gone from 1 million to 10 million. You want to hire the people who work at $10 million companies. You want to go from 10 million to 100 million, hire the people at $100 million companies. But if you're at 1 million, don't hire somebody from $1 billion company. I'm telling you, it's so hard for them to adapt to a DIY lifestyle like environment to be able to be successful in that organization. So you don't want to go too far. You really want to try to map out the experiences of your future leaders based on their experience and their personality profile.
yeah. Yeah, and when you say go the other way, the thing that I've learned, and I've heard you touch on this too, is that when you start something from scratch, it's going to be really hard and it's going to take more than you think. And if you think because you did something successfully, all of a sudden this will just start flying, you're probably wrong 98% of the time. And so I guess my mindset when I go the other way right now in the portfolio that I control, I've got some with only 3 employees and some with hundreds of employees. And so there's still quite a few, but the leaders in each of those have to, I say own the outcomes. You say own responsibilities, right? So that's the only way I'm able to do it. In fact, talk about that. That is such a great thing that I've heard you say a number of times around tasks versus responsibilities.
Yeah. So when you're in start mode, it's all about delegating tasks. Okay. Now, I will say this: my wife, she still does that, delegates tasks at the school. So she's responsible for everything. And when you're in start mode, I understand, and that's the way you need to do. You're winning a baby. It's all about the entrepreneur. It's all about the personality of the entrepreneur. And if you do want to go from start mode to scale mode, then we need to start learning how to delegate responsibilities, not tasks. Okay. Hiring great leaders to delegate responsibilities to or divisions of companies is very challenging and a mind shift that most entrepreneurs never get through. It's probably the number one reason why companies fail to scale. In fact, more than 99% of companies in the United States fail to scale. Yet it really is a defined formula. It actually is a defined formula. You can follow a formula and actually do that. In that book, we really do lay out that formula. And it's not just my expertise. It's the expertise of over 200 people that we've interviewed for this book. All right. There is a formula to scale. But the biggest mind shift change is going from delegating responsibilities, not tasks. I actually go one step further, and you sounds like you're pretty close to that in your situation right now. And I'm still relatively new to this, running a family office, but delegate companies, not just tasks. Okay, so that's a whole different concept. And now I'm coach to my niece, and I provide the coaching role. And like you, I have a company that has 800 employees, one of them that I'm involved with, and I have many companies that have 3 employees. It's funny.
That's the same thing as delegating responsibility, though. You own this, and your job, if you're running that business, is to continually grow its value responsibly over time. And if we ever sell it someday, I always say, if we want to make not selling it an equally good, if not better option, that way we'll get a better deal when we actually sell it. I like to build things to kind of to last. It's like buying a house. The market goes up and down, but it's going to be there a very long time, most of them. And I want businesses to be the same. I've never been in it to, I can't wait to build this and to get a big exit and go the other direction. No, I want something of real value that creates huge value in the world that other people will want, and maybe I'll keep it forever. And one of the things that I've been thinking about, and this is how I really run my businesses. On one level, I say, goals matter, systems matter more, leadership matters most, because it's the application of goals and systems. Like, what goals, answers to what questions, the right questions or the wrong questions, and then the systems that cause the most value to be created, and all the nuance of the leaders and how they're affecting that along the way. Like, there's literally almost an infinite number of permutations of how you would address things depending on the team and the situation. Um, Based on what I know about you and reading your book and listening to a number of interviews, that's hard for others to get. So, what are your thoughts on selecting leaders that will really manage, the right goals, the right decisions, the right systems, and in the right way to scale? And I think that's the reason such a high percentage of companies never get to $2 million in revenue. If they had the right leader, almost all of them would. That's my thinking. So, yeah.
Yeah, and you are right. And when it comes to hiring leaders, I mentioned earlier that you're looking for leaders who have the expertise, who've done 10 times larger companies than yours to help you get to 10 times the size you currently are. I would add that probably the most important thing for hiring leaders is personality profile. We do in the book. I started doing this like 25 years ago, using a DISC profile. There's Myers-Briggs. Um, yeah, and you can, if you identify the right personality profile for a leadership position in your company, and you hire a person for that profile, it's a lot easier to do that. I would actually say it's impossible to the alternative, which is hire somebody who's got good experience but doesn't have the right personality profile. You cannot change somebody's personality profile. It's pretty much baked in from 6 years old, pretty much on. There's very little can change, and they've done these studies that when people are very young to older, and their personality profiles are the same. Uh, that's so. What I've done and been very successful with is profiling individuals for, especially leadership roles, for different positions. Identify the positions first, define the personality profile, then define the expertise. I can't tell you how many entrepreneurs I've hired, or successful leaders, because a lot of them, they're very hard to hire because they have that dominant personality profile. And like, I hired a gentleman named Elliot Nass, who now runs a $500 million, he still runs it today, company called Two Cows. And uh, he drove me freaking nuts. This guy, he would like, no, he just, he was a lawyer, trained lawyer, and you know, he was a very smart individual. He always challenged me, he always fought me. Honestly, he drove me freaking nuts. But there are a few people in um, this world that have made me more money. When you hire these people, you don't want the yes men or the yes people. You want people who will challenge you. You want people who have that dominant personality profile. If I'm going to hire a leader for a particular position and they don't negotiate the salary, I won't hire that person. They have to push back on me. I want them to push back on me. I want them to really, you know, have that, show that personality that look, I'm worth this, and I need to get X. So if you're not pushing back and you're going for a leadership position, then I just don't think you're qualified to be a leader in my company, because that's what I want. And that personality profile, over time, you can actually begin to develop a sixth sense, basically, for individuals and their personalities. I sometimes, bar trick, I can actually look across the room and identify somebody's personality profile by their movements, by the way they act and behave, the way they're dressed, are they OCD, or do they have. It's fascinating, fascinating. So if you're looking for a great salesperson, you're going to want somebody who is very good at influencing. If you're going to use the DISC methodology, the high I. They have a very high I, high influence. They're very connecting. If you want them to close deals, then you're going to have a high D. A DI are your hardest hires to make, dominant and influential, because they are entrepreneurs currently, or they're in very high sales positions making a lot of money. So they tend to be very hard to find and get. But if you can, sometimes you can break that by hiring young DIs, or someone who's fresh out of college, but they got the right personality, they got the right gumption, they know what it takes to build a company, and then you train them. Like telling you, training and experience is way less important than personality when it comes to leadership.
Yeah. And I echo a lot of what you're saying. It was probably late 90s. I started using a tool called Personalysis, and I tried a number of others, but it's one that virtually all the employees got. And I put thousands of employees through it, and it shows their instinctive self, their social self, and their rational self, how they prefer to be. So, how they feel, how people see them or experience them in their ideal role. And people that used to drive me nuts, once I saw, well, we need that personality type in that role for them
Yep.
to thrive, like it would drive me nuts being a controller or CFO. I would be really good at setting it up, and then I would shoot myself, I'm kidding, if I had to do that job. But I never saw it wrong. And I tested not just leaders, I tested everybody, even frontline team members that are cleaning parts, and everybody had a little pop-up graphic on their desk or workstation. You walked up and you knew exactly who you were getting at. And it didn't mean they could fully realize that potential, but it showed their potential. And then it was our job to create an environment that developed it all the way through, sort of the ecosystem, if you will. So yeah,
Yeah,
it's ridiculously valuable.
it's like matching up a high, IS, influential and very, stable, or influential and conscientious, with a D, a sales manager, let's say, is a DC, dominant and conscientious. If you can match up the right, say, type of salespeople, like for instance, I'm a DC. I'm not good at, my son is an IS. Say that right away. He's OCD and he's very social, which is, I don't know how that even works, but somehow there are people on this planet like that. And he is. And if he's in an environment where he's got someone being the closer for him, pushing him forward, he's very successful. And that's that. So sometimes you can hire great salespeople, but don't expect them to do close if they don't have the right personality. So you're right. So once the manager understands that personality profile, it can make a huge difference.
Yeah. Yeah. It's, really, really valuable tool, no question about it. On the cash side, I asked that question earlier. We got to the idea a little bit. I find that often more money is raised than is needed. They make the wrong deals when they raise money, and they're not good stewards of the money when they do raise it. Like this is a huge problem in almost all startups that I experience. What are your thoughts around all of that and advice for founders?
All right, so let's start with a statistic. 90% of all companies on the Inc. 5000 have never raised venture capital. Okay. Right. Well, like right there, because everybody's always focused on venture capital, venture capital, venture capital. And 90% have not raised venture capital on the Inc. 5000 in the United States. Here's another statistic. And actually, I'll throw this one out. I'm going to kick this one back to you. What percentage of venture backed companies do you think fail?
Well, it's between 80 and 90%.
75%. You're very close. But I don't know how you knew that, but you're 75%. So imagine you think you've just won the lottery, you got your venture capital, and you still have three-quarters chance of failing. I mean, that's, to me, this is okay. It's not always about raising the money. We did interview a gentleman named John Mullins in the book. Um, One of my favorite chapters on customer funded startup. He wrote the book Customer Funded Startup. Uh, and I am shocked at how much you can actually raise from your customers. One of the companies that is in my portfolio, uh, they've done it twice now. They managed to raise from, it's a high end cybersecurity type company, around the domain space, and they managed to get, this one Fortune 500 company to pay them 3 years in advance for their software deployment. I don't know how they did it, but they didn't need to raise money when they did that. You're using your customers' money, whether it's an annual plan or whether it's whatever it is, you're using your customers' money to fund your business. And too many people seem to focus on the raising equity and dilution when cheaper money may come from your customers, actually. And there's an opportunity to do that. Funding is a tricky thing. So, in start mode, uh, it's very, very hard to get funding. We all know that. Okay. In scale mode, once you have a concept, your CAC, cost of acquisition per customer, your lifetime value of a customer, it seems so easy to raise money. It seems so easy. And yeah, there might be some exceptions to this, like, if you're an AI startup or, in one of these hot spaces. But for most investors, they just want to know that if they put money into a company, it's going to accelerate the growth. So your formula needs to be defined. You really do need to lock down your formula for scale. And once you do that, it becomes a lot easier. In our book, we have a really extensive chapter on raising money in a scale mode. My favorite form, I'm doing one right now. Next couple of weeks, we're filing is a Reg D for sophisticated investors doing a private placement memorandum. By the way, I in 2012 I paid $17,500 to have my lawyer write my private placement memorandum. 2 weeks ago, in 3 hours, with ChatGPT, myself, and Claude, we were able to put together a very sophisticated private placement memorandum with risk factors, executive summary, budgets, projections, everything. And honestly, it is just a game changer how AI is enabling startups today to get off the ground at a fraction of the cost of what it used to be. A fraction of the cost. Uh, you know, we're seeing that actually in the numbers. There's been a 36% rise in startup formations in 2026 over 2025. Ironically, at the end of 2025, I made the prediction that 2026 is going to be the year of the startup. Except for interest rates, it's a great environment out there to start a business.
Yeah. Well, and the little bit extra we're paying in interest, we make up for in the efficiencies of AI. We were talking
Yeah, the price.
before we started recording. Easily in my different ventures, we've saved at least $10 million over what it would have cost to do the same things 10 years ago due to AI. And I think I've heard you say you have more, but I personally use 5 different AI platforms in my work, and I go so much faster. It's just incredible. Love it. And some aren't embracing it, some are afraid of it, but isn't it true that almost everybody's using it because AI is influencing the apps they have and all of it, right?
Well, I don't think everybody's using it. In fact, I think there are, even myself, like I keep coming up with different ideas to extend the AI mindset. Like I truly believe you have to have an AI mindset. And like, for instance, every time I signed a contract, and I've been doing a lot of different contracts in the last few weeks, okay? I would take the email and I would send it to my executive assistant and I say, please put this in the Google Drive. Okay. Not a lot of work. Okay. But I'd forget them sometimes, and then, when I need them, I can't find them. And I set up an AI agent, and all I do with the agent now, I said once a week, go through all my signed contracts and send them to my assistant. Now I can take it a step further and say, oh, also, can you put them in the Google Drive? So I don't even need my assistant there. Okay, but I do have humans. Right at this point, we do have humans involved. Paw.com, we have 19 agents that run the company, 19 AI agents, and we replaced about 5 offshore full-time people with those 19 agents. Uh, E-commerce is very, very tight margins. So to be able to save that kind of money was incredible. Uh, you having that mindset to be able to think about, okay, I need to automate everything in my life. And agents is a whole new level now. We're at a whole new level now. We're shifting from just, okay, how do I write content, or how do I create great images, or that kind of stuff. We're shifting to this mindset that we can automate almost anything. So we have 100% automated our accounting on Paw.com. Now, Last week, I had a very contentious meeting with my lawyer on the PPM. He got very angry at me saying, "Oh, how can you have a PPM that has all this? It's not, you don't know it could be hallucinating." No, I'm telling you, I've had double checked. I've gone through it. You can have AIs check another AI. It's great PPM. I had another meeting last week with my bookkeeper on my real estate business. We have 19 Airbnbs. And I'm like, you guys are like they are literally manually taking every single thing and doing journal entries. This is insanity. Like, what's your guys, you need to be, this needs to be 100% automated. Oh, AI is going to make mistakes. No, what we're going to do is we're going to automate it and we're going to tweak it and we're going to monitor it. That's your role. You need to become the controller. Lawyers and accountants and many consultants in this world are all going to lose their jobs unless they do one thing, and that's embrace AI and work on behalf of their clients to actually automate it. And then they can spend their time on other things. And that's what I told her. Like, we might do 50 new homes on this island of North Captiva, right? We have 5 building lots right now that we're working on. And each one is a different corporation. Each one's more work. I need you to help me do that. I don't need you to do bookkeeping over here. So AI and AI agents and what we're seeing now is unleashing the greatest entrepreneurial opportunity in history. And I truly believe it will mint more millionaires than any other technical shift that we've seen ever in our lifetime. And we've gone through a lot from that internet starting, broadband, social media, the app revolution, the whole thing. We've seen so many paradigm shifts. And now what we're seeing is almost 100 times bigger than all of those combined.
Yeah, I agree with that. I like the idea of thinking about AI in terms of AI productivity with human accountability. So I don't think the people need to go away, and I agree with you. They need to embrace it. And I get to work with a lot of leaders and a lot of different companies. I actually have 3 different CEO mastermind groups that I lead. I know you're probably still in EO. I developed my own after
Yep.
16 years in
Oh,
Vistage,
cool.
and I love it. In fact, I've got a couple of guys that are starting groups in Poland right now, so I'll probably start scaling this. Um, but what I've noticed with them is like, here's AI, I'm trying to learn what it can do. And I'm saying, well, wait a minute, let's back up and say, where are you trying to create value right now? And how can AI or any other resource or tool out there help you do it better, faster, more effectively so you get there and you're testing your assumptions at a much higher velocity? That's the way to think about it. And then the questions that we have, and a lot of folks, CEOs, they're the big question, I want to be able to create this value in this way. So they assume I'm going to have AI do all these tasks at the bottom. Why not just give it the problem and have it work backwards? And how would you structure the organization and all of it? So I think we're a long ways away from even using it today as effectively as we could. And then this is going to be crazy a year from now when it's 5 times smarter.
Well, it is if you embrace it. It is if you have an AI mindset, and it is if you dive into it. Look, I'm not a programmer. I am far from a geek. I've never been a geek. I've only aspired to be one. Okay, and I can't do. I can even transfer a domain name, and I've run companies with million domain names, whatever. My point is, you just have to dive into it, and it's easier than you think. It's easier to set up these agents than you think. It's easier. Now, I didn't get into OpenClaw. I have to admit, OpenClaw was something our CFO did, because it was like, it was a little too. I'm not, and I don't think you need to jump into OpenClaw because you've got Claude now, and even ChatGPT's added on agent capabilities to do a lot of these functions. My son, it was just so fun. I was working with my son a couple days ago on automating lead generation. So what it would do is go into Google, look at the daily updates for he's in Ontario warehouse. So he owns warehouseforsale.ca. And what he does is he goes in, looks at all the expansions of all the companies. This is what the agent does. Okay, listen to this. This was something 2-3 days ago we set up. Okay, goes in, looks at all the expansions in announcements. Um, g- Goes in, identifies the company, identifies who is the best person in that company to email, tries to find the email address, gets the email address, writes the email, sends the email to the prospect. Custom written by, obviously initially by my son. Uh, that's what we're talking about here. This is the kind of level of freaking mentality that we have to have that can make you money in this world, because these agents can be working for you. Now you got to be careful. You don't want to get caught with spam. And by the way, there's ways to handle that. We've already talked about is like you set the rules, deliver email from this to this time to this time. Don't do more than 5 a day. Vary the times. There's some rule sets you can set in place too to avoid being, locked out from
Even make sure that your agents that you've set up don't respond to prompts that come in from other agents. And I still think with all of this, we have to be so mindful about security, our financial information, other personal information. When it's all out there, how do you really know? So I'm always careful about that when I'm going through it. Your comment about you're not a programmer. I think anybody that can speak or type English right now is a programmer. It's the most powerful programming language on the planet. I can write an app on a weekend. You take a team of 10, 3 months to do.
So I did one, and it was tough. So I'm in Claude, and I decided, so there's this game called Rummy Gummy. It's an Australian rummy game. And I'm like, oh, there's no Rummy Gummy apps. And so I go onto Claude, and I say, I would like to make this app. I did this Saturday afternoon. So working for about half an hour on Claude, we developed the app, and it said, okay, great. And I said, okay, how do I run the app? You got to put it on Xcode on your Macintosh. Well, I don't know what Xcode is. So I'm like, okay, what do I do? And they go, download this app. So I did it. So I moved it over to Xcode, didn't work. Took a screenshot of Xcode. It says, look, it's not working. What's going on? I said, oh, that's because you didn't do this, this, and this. And so I did all those things. I went back and forth, screenshot. 30 times I went back and forth, 30 times. Finally, I had an app. I made a full-blown app, and it was live.
Still faster and cheaper than paying somebody else to do it.
No, I understand that, but if every time I came to a roadblock, it said, and by the way, even the code, it made many coding errors. And the Xcode, when it ran the code, it would say, oh, this is an error, 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 error. I took a screenshot, put it back in Claude. I said, Claude, you got to fix this. Okay, rewrote the code. Here's the new code. Done. So you just keep going back and forth, back and forth, back and forth. And I was able to get an app running. Look, I never would have been able to create an app in 10 years. Probably I wouldn't, I could never do it, obviously, because I don't have the training to do it. You can be an expert. I did a video, music video, amazing songs. I've produced amazing songs. I use Marika. I know there's Sora, I believe, but amazing songs. I did one for my wife, and I did one for my mother. I did, I've done some videos. I did one for USA Made in America, and it had 160,000 views on YouTube. I was able to create every shot from Gemini video, the music from Eureka, and it was phenomenal. It's just, you can do anything. And I think AI is unleashing the creativity around the globe. Now, I know there's a lot of negativity because, if you specialized in writing manuscripts, let's say for movies, and you have that expertise and no one else does, I understand people would come to you to help you to write that manuscript, or those, if you want to write a TV show or a movie or something. Nowadays, if you have the idea in your head and you interact with the AI, you can create that manuscript. You don't have the formality of design, whether you're an architect, a writer, even a mathematician. You don't have that anymore. So whatever you can imagine, you can create. I think this is probably the most exciting time in history for being an entrepreneur.
Yeah. Yeah, I don't think, if I just look at the United States, we're creating even 10% of the value we could as a country, and AI can help us actually realize 20%, 30%, 50%. So I don't think it's going to replace jobs so much as just help us all create a whole lot more value. And, something I've never liked the term, people will call me a serial entrepreneur because of all the things that I've done and I'm doing. I like to think of myself as a perpetual value creator. My goal isn't, I don't think about, I'm going to start this and start that, and I want to be seen as anything. No, I just want to create more and more value in the world through for-profits, nonprofits, families, all of it. I have a community, one company called dinnertable.com is the website. And we just lapped 2 years a couple days ago, and we have 40,000 parents in our community. And I want to grow it to millions and help parents raise kids that will create value in the world. And I launched a book in February this year titled Value Creation Family, and it's already sold close to 2,000 copies, and we barely started marketing it. I mean, this concept's really resonating. But I think about perpetual value creator. That's how I look at you. The term serial entrepreneur doesn't seem accurate enough.
Yeah, I don't know. I mean, it's interesting you talk about community. One of my companies is a company called Live at Sea. Um, so yeah, so like this whole idea of I was on a Royal Caribbean ship and I'm using Starlink. This is like 4 years ago, and I'm like, holy, like this is amazing. I literally did a podcast. I was doing Zoom interviews. I'm thinking it doesn't matter where you live anymore because of Starlink. You can actually work anywhere you want, in the world. We could be doing this podcast. I did one a couple of weeks ago with someone who was in the Pacific going to Singapore, and the quality was almost the same quality as this current podcast is. And so it doesn't matter anymore where you live. And I thought, this is something that really interests me. So I decided to launch a Facebook group called Live at Sea, and it became the largest group around this concept. Then I said, oh, now that I have the largest community, why don't I create the website liveatsea.com? And now if you type in living at sea on Google, it's the number one link for SEO for Google. And how did I do it? A lot of it was AI. So what I do is I use so one thing about content amplification is that AI does not like AI. Let's be very clear. I write for Entrepreneur Magazine. I write for Forbes. I write for Startup Club, obviously own Startup Club. I never allow AI to write the articles ever. Okay. But what I allow the AI to do is help me clean up the raw content. Okay, so like we could take this episode. I'd love to do it. Get your transcript, and we'll put out an article on Startup Club using AI from this transcript, and it's going to be a phenomenal article that give us a very good spot on Google SEO or even on the LLMs because it's real and raw content. It's humans going back and forth, sharing our actual stories, our actual failures, our actual successes. So I did this at C.com. I go on there. I take the content from the community members who talk about the costs of living at sea or healthcare at sea, all those things, and it's become a database now on the internet, written by humans, by a community, taken by AI, turned into articles. And obviously there's another step involved here. How do I monetize this business? The next step is we own cruisecondos.com. And we're actually going to be launching a platform. Will be the realtor.com and the airbnb.com of the seas. That's our goal. It's a brand new space. It's just coming out and we're expanding into it very, 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 very quickly. This is
So
what
like buying a condo or something, you can get
yeah. And in fact, my wife and I did buy a condo. We actually bought one.
a room on a
And
ship
so
with a suite
we
on a
have we're not moving on to the condo. I mean, we'll be there 3 months a year. And we're doing that in January 2028 on the Evora Lumina. It's a fascinating ship. And I'm actually going to be visiting the ship in about 2 weeks in Barcelona. Looking forward to that. But here's an idea that I had, a passion, and you might have a passion out there. If you haven't started a business yet, you've got a passion, a hobby, something, and you talked about it with your community as well. You can put that into play. Just use AI along the way to help you get there. Don't use AI to create the content. Use AI to amplify the content and clean it up.
Yeah, that's great advice. That's how I do it. I'll write one resource for my Leadership Value Lab community. Then AI can help me put it into 15 different formats for different columns and all of that going through. So it's an amazing productivity tool. So I love that. I wish we had another 5 hours, and I have about 11 minutes left. On the repeat side and a little bit the exit side, I've had a number of friends that had an exit, and it was life-changing money, and it was their first time getting a big check like that. And it could be anywhere from 10 million to 100 million, $200 million. And when they ask for advice, I always give them, okay, here's what I recommend you do the first year. And that's not investing in all your friends' businesses. And lo and behold, at least half of them lose most or all of it because they didn't listen to any of it. What's your advice for folks that get big checks for the first time that don't have experience investing. And I feel like when you have that, it's a pretty predatory environment with everybody running at you, telling you about your 100x returns you're going to
Yeah,
get.
I'm probably, the example. I'm probably one of those people. I'm actually am. And, like when we sold off the company, you know, this was 2 cows and, um, we it was 1998 and it was a long closing. It was like closed like at 1 o'clock in the morning and we had signed so many documents. Things were so archaic back then. And we drove home and I had a check in my hand for $22 million. Now understand, before this, I had no money at all. My wife, she just thought I was doing crazy stuff with the internet or whatever. And I go into the house, I climb up to the top floor. It was a tiny, skinny home, very tiny home, but 3 floors. And I climb up the top and I climb into bed and I hand her the check for $22 million. I say, okay. And she looks at it, she wakes up, it's like 2 o'clock in the morning, and she's like, I don't understand. She goes, I don't understand. I don't understand. There were so many zeros, you couldn't understand. It was completely life changing, this moment. You went from, like, living, a poor life to, obviously wealth. And, um, at that point, you go to the money managers, you do this, you do that, you start throwing like, it was 1998, right? We started throwing money into new companies and everything. Fast forward 2, 3 years later, that Hostopia company, you talked about 9/11 earlier, that company, we actually were losing $450,000 per month, this platform. When I stepped in, I was running the prior company, and then I stepped in, my business partners were running the new company, they were losing 450 a month, and we were just wasting so much money. I mean, we had a lot of money thrown at us, and we just thought things were gonna go great, but then the dot-com crash happened, and then 9/11 happens, and our business just, tanked, and we had to step in. Now, thankfully, we did, and we focused, and we got eventually we became very profitable and went public. But that being said, too many times I've sold companies for a lot of money and have made I guess I get relaxed. Before I sold 2 cows, I was paranoid of losing, paranoid of everything, and then their paranoia level goes away, and you're right, you tend to make mistakes. I've made those mistakes. I am definitely not a good example of someone who knows how to, because I'm a start, scale, exit, repeat guy. So I'm not this consistent, start, scale, exit for a lot of money. I've done over 12 multi-million dollar companies. And then, the repeats, I'm still learning how to be that investor, to run a family office. Um, Unfortunately, paw.com, and it sounds like a big company. It is a pretty decent sized company. I had to replace the founder. I believed in the founder for too many years for too long and ended up losing too many millions of dollars on this company before I finally made the decision to replace the founder with this lady who's amazing. She's absolutely phenomenal. She was president of my last company, so I know what I'm dealing with, right? Again, delegate companies, right? Not responsibility. She is good and she's turning it around and she's done a very, very good job. But I'm saying I have not done a good job. I can't profess to say I've done a good job at running a family office. I still am learning the ins and outs of that. And I'm learning the hard way. Unfortunately, I've lost millions. Now, again, I've been lucky to make millions in other companies. And so I can't, it sort of balances out. But you're right. When you do make that big exit, you do have to think about taking some money off the table. It's great when you can pay for your kids' education. It's great when you can buy a second home or whatever it is, and you can live a life at a younger age than you would normally. Some of my friends, they've made hundreds of millions, and they're still living in they won't spend it. Like they're just stuck, and 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 I'm like, there is a point in time in your life where you do want to try to take some money off the table and enjoy your life as part of the journey. And let me tell you, there's a tax benefit to start, scale, exit, repeat versus start, scale, exit, keep. Or sorry, start, scale, keep. When I sold Hostopia, we mentioned 17.7 times EBITDA. That company had tax rate of 42%. We sold it at a capital gains rate of 15%. It would have taken us 30 years to make back the money. And something could have gone wrong in that 30 years to make back the same amount of money. So there is a tax benefit to thinking about it. I think one of the biggest impediments of exit for most entrepreneurs is their identity. They lose their identity. This is who I am. I'm the CEO of this company. No, you're not the CEO of this company. You're an entrepreneur. And entrepreneurship is a trade like any other trade, and you need to sharpen that sword and accept that. That's who I am. I'm an entrepreneur. I think when I did sell Dot Club, I'm still, by the way, wearing the Dot Club t-shirt here,
I
and I
see
sold
that. I see
this
that. Yeah.
5 years ago. Okay, so I admit that you hold on to your babies like they're your babies, like you work so hard on them. But the reality is, that's not your identity. Your identity is entrepreneur, and 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 continuing to start, scale, and exit companies and do more. And just we just live in the best time in history with AI. I love it.
Yeah, I agree. Yeah, my identity is the value that I'm creating in the world, and I try to keep a good balance of material, emotional, and spiritual. And spiritual to me is just connectedness, like all the communities around the world that I'm connected to and the opportunities it opens up. And it doesn't matter what happens. I could fail at this company, I could lose this, get sick. I can still create value in those three buckets in the right balance for me. I have seen a lot of folks that make their company their entire identity. It's like, oh my gosh, that's so fragile when that happens. And so anything we can do to help them through that, I think is really good. One last thing to touch on, and I've heard you talk about this, is the sort of issues that CEOs have, or founders of companies have, around mental health, and about half of them are suffering from something. But what are your thoughts there, and how you could help our listeners kind of think about this concept and what they might be able to do about it?
Yeah, the vast majority of entrepreneurs really are neurodiverse. And we uh, uh, researched a study that happened at Berkeley University, and in that study, it had I think 58% of people entrepreneurs have some form of neurodiversity. Okay, it's like 29% are ADHD, 9% are bipolar. You got addictive behavior. Like I know there's addictive behavior when it comes to gambling with me. Like I can't stop registering domain names. I'm always registering domain names, especially the latest trend or the latest thing. I'm always like, and I get a kick out of it. I get something out of it, right? Um, but these are actual. Many of these things are what actually make entrepreneurs successful. But at the same time, they can have a negative impact. Um, Unfortunately, we saw the founder of Zappos. He died. We don't know why he died. He may have died because of suicide. He may have died because he got into an accident. But the reality was he was in a bad state of mind, when he passed away. I had a friend as well who, on Friday, this was like 2 years ago. On Friday, he had 100 employees. He laid them all off. He was in the real estate buying business, and then on Tuesday, he lost his life to suicide. And these, in his in actually in the celebration of life, his father talked about that his identity was this successful company, and that he had lived, and he's only in his 40s, like a young guy, and he has so much potential. I know he would have been successful again at doing the next company, but he lost his life to suicide because he's stuck with this identity. Mental challenges are part of who we are as entrepreneurs. Everybody looks at entrepreneurs and think they're like heroes, like Elon Musk, they're superheroes, blah, blah, blah. I'm telling you, Elon Musk's got mental challenges. And one of the most important things I think we can do is seek help. Now, I know that we all think we're perfect. In my organization, entrepreneurs organization, we have something called forum. We meet, 8 of us meet once a month, and we really do share our personal business and uh, uh, a personal and business topics, and family topics. Sorry, and family topics, so that we can become better at running a family. We can become better at and dealing with the personal emotional roller coaster. Look, it's a freaking roller coaster. That's what we go through. And if we don't understand the challenges of that and how that affects people around us, you know, I have one little routine that I do when I get home. I come home, I go into my hot tub, and I just relax. I totally calm down. and I go upstairs, put on sweatpants or whatever, and I'm in a totally different mind. I used to come home all the time, and I'm staccato, and my wife would say, "You're just always barking orders at me, like as if you're still at the office." And I do have a different personality at the office than I do at home. When we recognize that we have this, it's important to seek help and with others. And I'm not ashamed to say this, but I have a psychologist who I meet with on a regular basis to help me through the mental challenges that are affected by the businesses that I run. And we talk a lot about the intricacies of all that roller coaster. It is not easy. It's not easy for anyone, and it can be very challenging. Uh, but sometimes getting help from others and going through routines to sort of shift from work mode to relax mode. These are some of the things that we learned. We talked about in the book. We just touched a very tiny bit about in the book. There's a lot more to think about.
Every one of your chapters, 50 some odd chapters, could have been an entire book. So I 100% agree with that. Yeah, I think, we go to the gym. It's important we exercise. When I go to the gym emotionally, when I go to the gym mentally, we should be doing all that. So I agree with you. And I think how we feel going through life is what's most important, not how we're seen going through life. As I'm listening to you, I think a lot of folks that have this identity and everybody sees them that way, and all this pressure that shouldn't be pressure comes in from the outside. It's like, no, how you feel, I think, is what really matters. This has been fantastic, Colin. Thanks so much for taking the time. Any final thoughts for our listeners?
I think again that entrepreneurship is a trade like any other trade, and learning how to sharpen the sword, become a better entrepreneur. There's probably no better way to do that than educating yourself. Like this podcast, the fact that if your listeners are here still at this point, they've learned a lot and they're listening. Grab the book, Start, Scale, Exit, Repeat. We've won 40 global awards. In fact, the book has won more awards than any other book published in history for entrepreneurship. And some of them are pretty notable big awards as well. It has also been a number one bestseller for 15 spots on Amazon, and and you can get it at Amazon, Barnes and Noble, wherever it is. You can buy the book, but it's all about learning. And when you learn in real life, or you learn through books or through podcasts like this, then you become a better entrepreneur. And that's and within an AI world, AI can be a way to help you learn as well. And have an AI mindset. Never stop thinking about. I can't believe every day I keep thinking, why was I not using AI to do this? I can't believe how many times I've said that in the last few weeks.
Well, we have to evolve and go down that road and figure it out. And I can attest, your book was amazing. I consumed it in one sitting. I couldn't put it down. It was awesome. So I recommend all the listeners get your book, Start, Scale, Exit, Repeat. An amazing book. And if our listeners want to connect with you and learn more about your work, where can they go?
Yeah, just go to startup.club, sign up to our email list. We do a live show on Clubhouse every Friday, 2 o'clock Eastern. You can go to startup.club, you get the details about that. Or LinkedIn, just go Colin C. Campbell and just send a LinkedIn. I'll connect with you. I love to hear from entrepreneurs. And I actually do go through my LinkedIn, and I get about one or two a week of people saying, I read your book. And they show me pictures of the book, the post-it notes, everything, the 4 sticky note business plan in the very first section of the book. And I get a kick out of that. I really do. So yeah, do connect with me on LinkedIn.
Yeah, thank you for the work you're doing to help so many entrepreneurs, and really appreciate you being here today, Colin.
Well, thank you.
Yeah, and this has been the Show Your Value podcast. If you got some value out of today's episode, please like and subscribe. And until next time, show your value to the world.